Hey everybody, it is Trendy John from Simpler Trading. First, I just want to say thank you to everybody who came out to yesterday's 2025 supply and demand class where Melissa and I were able to teach you the fundamentals, the principles of supply and demand, and how to identify those zones. I feel really confident that you guys are now equipped with what I feel can change your trading for the rest of your life. Second, if you wouldn't mind just taking a few seconds, go ahead and hit the like button and let's get started with this week's broad market analysis. So, the first thing we're going to start with is going to be Market Watch. This is free information that I use right here on the internet. And what it allows me to do is identify any catalysts that will be coming out in the market. Now, as a professional supply and demand trader, I will tell you that all of this information basically causes some volatility in the market, and we just want to be aware of what time. All right, so this is Eastern time, and the most important part of this is that already identified our zones. So, what we're looking at this and understanding is that the catalyst itself will push price. Okay, let's go to a just a whiteboard here. Price will either be pushed into a demand zone or a supply zone. Supply is red, green is our demand zone. And again, let's just say price is here. Let's say CPI or PPI causes price to drop. We want to identify those zones. We'll go over those zones here in a minute. And then exactly what we've taught over the weekend and what we continue to teach in the room, we understand how to execute these and what we'll be looking for as prices then to move up. And then we'll have our trim levels and so forth. However, also what you can see is price starts here and the catalyst pushes price into a supply zone in most cases where we are looking to either take trims off of our long positions or we're setting up for a short. So, again, all of these events that are happening are just catalysts that push price to supply and demand. Monday, there's nothing scheduled. Tuesday, NFIB Optimism Index. Optimism, that's a great word. That's kind of how I feel about 3 weeks down, and we just happen to come into a little bit of demand. So let's see if there is any optimism in the market. 10 o'clock Eastern Time, job openings, and then things start to sound a little bit more interesting as we get into Wednesday with Consumer Price Index, CPI, monthly US federal budget, and then Thursday, again, initial jobless claims, and then core PPI, and then on Friday, consumer sentiment. Let's move on now. The next thing we'll be looking at is earnings. Same thing here. Earnings are just a catalyst that pushes these prices into supply and demand. And typically, what I'm looking for during earnings is one, I love to teach how to trade into earnings with confidence by using supply and demand. And that will be part of our my 6 classes that I'll be teaching over the next couple months. So, again, I love that so many of you have signed up for this, but if you haven't, it's not too late. There is time to still sign up for Melissa and I classes. We'll be hosting another 12 classes during the next several months where you can learn all about this. Now, when I look at this, I'm looking for types of names that like to move, but I'm also looking at the distance between supply and demand and seeing if I can see or find a trade that could outpace or surprise to the upside or downside and not use what a lot of people would use like the analyzer to see what market makers are thinking or expected moves. We're looking for moves that are unexpected based on supply and demand. So, anyways, some of the names that I really like going into this week to look at for a possible trade would be Oracle. And then on Tuesday, I like the idea of Kohl's and Dick's. And then moving on over into Wednesday, Adobe, Path. Thursday, looking at Dollar General, DocuSign, Ulta. These are all names I think could move quite a bit here. And I may put charts together for earnings and possibly even take trades into earnings. Okay. The next thing that I'm going to be looking at is TradingView. Now, I execute off of Thinkorswim, but here at Simpler, when you purchase indicators with us, not only do you get them for Thinkorswim, but you also get them on TradingView. I love using TradingView because there's a lot of perks to it, like saving templates. It's just really easy to work with. And so what I like to do is show you the SPY and the QQQ from a quarterly perspective. I give you notes every single week, and I keep those notes in here. And what I do is I want to give you the bigger perspective because I believe this is the most important part, at least for me in trading. I want to stay on the right side, but I also want to look at the macro look, where are we headed and so forth. And you can get a lot of clues using these quarterly charts. For example, my 2025 projections were, you know, we wanted to stay long, but also with a lot of caution over a certain level. We were completely on board and really in line with the market. As soon as the market went underneath that level, we knew that it was basically risk off until we could claim or get down into bigger demand zones. Now, when I look at this quarterly, I always like to point out this trendy EMA cloud. It looks a lot like, some other EMA clouds out there, except that it has a robust, um, indicators behind it, some code that gives me structural buy and sell signals. So that's where the green and the red arrows come from. And you can see they've been on point for a very, very long time. And then you'll see some yellow and blue arrows. Those have nothing to do with the cloud. Those are actually based off of compression. And that is what we call the trendy turn signals. Now, one thing to take note of when we look at the cloud is it's pretty easy to understand that when you're above the cloud, we're riding the trend. And when we come down to the cloud, we're typically bouncing. And it has worked for a very, very long time. The last time that we were even closed underneath the cloud looks like it probably came in here around 2011 and back here in 2010. But ever since then, we got above, and you guys can see that the cloud held price. So in the event, for some reason, if in 2025 or even 2026, if we ever come back to this cloud, then I'll be looking for it to be support. So I just want to make sure that everybody understands that. A few notes, and I make it really simple. I'm not over analyzing here. We use 99%, technical analysis using supply and demand. Every once in a while, that 1% or 2% would be just a little bit of gut and time in the chair to give you some of my opinions. But remember, price is king. So far as price is concerned, we are 3 weeks down, and as of right now, the quarter candle, which is this candle right here, every candle represents one quarter, is inside. Now, if you attended our class yesterday, you know exactly what that means. And what it does mean is that possibly if this candle closes inside, okay, so we have something like this, a rally, and then we have a base or an inside candle at the moment. Basically, what I'm saying is, as long as it stays inside the body and we close here in 22 days, that's how much longer we have until this candle closes right here. 22 days, then what we can do is go into the next quarter and we can set ourselves up for either a rally base rally or an inside and up formation, or perhaps it's a rally base drop or an inside and down formation. So what does that tell me? It tells me that for the next 22 days, that even if price breaks below the body of the last quarter or breaks above for some reason, that I do believe strongly that we're actually going to close somewhere between the body. So what this tells me is for the next 22 days or at the end of this 22 days, I am at 1%, giving you my historical, I'm able to analyze very well. And so I'm using that 1-2% of my gut, saying that price is probably going to close somewhere between 586 at around 573 by the end of this quarter. Even if it flushes down, I believe it comes back up. And even if it pushes up, I believe it comes back down between those two levels. All right, guys, and let's go ahead and move on. Now, one thing to note here is price came very close to the bull channel support from October. Basically, what I'm doing is I'm identifying this trend from October. I'm applying some Fibonacci's and I'm anchoring my coefficients there. And that's where we come up with its 23.6 and the 38.2. Technically speaking, using trendy Fibonacci, this is still very bullish. We are still hanging above the bull channel, which is between 562.5 by 533. This week, my two major levels, all right, come off of the 2-day demand and the golden pocket. Let me go ahead and show you what that looks like. So remember when I told you, right, that the difference between a supply and demand trader and a lot of other traders is we do a lot of different unique things to make sure that we have an edge over our competition. So for example, on this daily, which is a common time frame that a lot of people would use, I'm going to come over here and I'm going to go to the time frame, okay? And what I can do is instead of day, I can come down into 2 days, okay? And let's go ahead, we're going to give, yeah, 1 year I think is enough. And you're going to start to see that things look a lot different. What that does is change the entire profile or structure of candles. And I want you to see where I got this 2-day demand zone. So if we come over here and you apply everything that I taught you in the class, this should make sense to you. Okay. Here is our drop. Here is our base. Here is our rally. Or, as I would say, the inside and up. We had a really strong, nice move out of here and prices now come back into that level. We got a really nice bounce right off the start from 570 all the way into the trendy edge, which was 584. So about a $14 bounce. Now we come in, 2 days later, we come back into the zone. And one thing that we can do in this zone is just take this quadrant lines and just go from the top of that proximal line to the bottom, and you guys can see that we came in 25% of that zone and we found buyers. My two major levels when we look over here is going to be this demand zone in general. So this entire thing, if you will, I want to see buyers show up here. So even if we were to flush lower, my next level that I'd be looking for is around 563 for buyers to come in. And if that doesn't work, 560. And if that doesn't work, 557. To the upside, I'm using the golden pocket. Now, you all know that these levels are going to serve as resistance on the way up, so you can look at them as more like just a resistance, take profit type of level. And you can see also from the move itself, we closed right at the 23.6, being that resistance level. Bulls, we really need to see you guys get up and over 576 and some change, hold that as a base. And then again, if we get some strong push, what I love about this, and you'll see this later in the video, is that your fear and greed, your extreme fear, um, we're coming into demand zones. The majority of participants out there in the market are probably fearful and buying a lot of puts, and it is a great time to kind of do the reverse of a pull rug and rip the market, let some of those puts lose value, give you a little bit more hope. And I believe that hope could come into these levels up here and things start looking different. People start to speak a little bit more bullish, if you will. But the golden pocket, I believe, is going to serve as an area where, for myself, I can look to be looking to get short or to put on new short positions to the downside. Okay. So two major levels, again, the golden pocket here. And one thing to note here is that the golden fib is aligned with the trendy indicator, which is your yearly edge, the level that I told everybody this entire year. As soon as we go under that, it's risk off until we find a nice demand zone. Now, whether this is the nice demand zone or not, it's still up for debate. We don't know yet. Okay. But what I do know is we are bouncing from it. The other thing that I like is in the golden fib, you'll notice that this trendy cloud is kind of collapsed and come down. And so it is right there and it is aligned perfectly with the Fibonacci. So we have a lot of synergy, if you will, right in this area, a lot of confluence where we could see this level work really well to the downside. Okay. And again, the trendy level is right underneath there as well. All right, so the next thing that I want to be doing is I'm going to come over here and we are now going to go to the Qs, right? The Nasdaq. And same thing, let's go over this. It would be no different than the SPY, meaning, you could see the value of the buy signals that come from our cloud. You could see the value of when price comes back into the cloud, that it has been a cushion and support for rallies for many, many years. The next thing is we are also inside on this candle. And just like the SPY, okay, if I were to come in here and open this up like this, my prediction in using that 2%, 1% gut, if you will, is that I just draw a line over this previous body and then a line at that portion of the body. And my idea is no matter if we flush below or not, we will end the quarter above 487, but not above 511. Okay, so again, closing this candle on the inside, and just like the SPY, we have 22 days. Also, the notes, let's go ahead and read them. The quarter stopped this week at the bullish channel of the October rally. The quarter candle is currently an inside candle with 22 days left. The two major levels this week are the 2D, again, 2-day demand level, and the golden pocket. So let's get over here. Let's take a look at the QQQ. All right, here we go. Check out these beautiful levels. Couple notes here for everybody. 3 combined zones is what I am applying to this demand zone. Okay, so really good information that we dropped yesterday, new information to help you guys understand how to limit your risk on these demand zones when the overall banners are red. So again, if you did not attend the class and you are a Trendy member, I would 1000% go back, purchase that class. It was recorded and watch it. There is some great information. My and Melissa's focus was making this all about zones, guys. So we did 4.5 hours of not only just zone work, but also some psychology behind trading supply and demand. This is awesome. But in this area, we took 3 levels. I went ahead and combined them. And again, this makes for a wide zone. And anytime that we are using a wide zone, I'm going to come in here and use my quadrant indicator that is free with Thinkorswim. And you guys can see that prices broke down. Each candle, by the way, just in case nobody or some of you don't understand, when I say 2D, basically each candle represents 2 days of data. Okay. We came into the demand zone. We bounced right off of 25% of that zone, which is a great start. And just like the SPY, I anchored our Fibonacci's here, and you can see that we are still underneath the 23.6. Each one of these coefficients will be resistance until proven otherwise. So for me, if I'm long, that can be an area of where we take profit, those type of things. But also the golden Fibonacci here is just a tad bit different than the SPY. Notice that your trending cloud, and by the way, this pink line is a 50 SMA, that are lined up and confluent inside the golden fib, but we are just down a little bit, so you could find a little bit more heavy resistance in the Nasdaq before it gets to the golden pocket. Just something to note there. Okay, so your two major levels again, golden pocket and this entire demand zone. If for some reason we take out the 25%, I'm looking for buyers to come in or around the 476, and if that doesn't work, 471, and if that doesn't work, 467. Again, both things to take note of. Both of these came into 2-day demand zones, and they are working so far. Doesn't mean they're going to. We'll have to see what sentiment is going to do. But going back to the US economic macro data that's coming out, there's nothing scheduled for Monday. So really it comes down to whether or not we're going to have tweets and that type of stuff that's kind of on social media that's creating volatility, like the word tariff, right? So again, that's cues. I love both of these charts. I love what we're seeing here. Let's go ahead and get back to trading view. The next thing that I'll be looking at is going to be the overall the dollar or the DXY. We're going to simply put DXY here. And before we move on, please, everybody, just take a few seconds, go ahead and hit the like button. As I like to remind everybody, I do this for you all. I don't get paid to do this. This has nothing to do with simpler trading. This is just something I like to do on Sundays and provide you with what I feel is awesome information to get you ready. Okay, so please hit the like button. Please share with your friends and family. And hey, give it to another trader if you see that they're struggling this year. I think that this information could really help them out. Back to the dollar, let's get into a weekly time frame. And I want you to notice that after hitting the supply zone, that the dollar has weakened up and continues to pull back. A couple things to note that our candles are going from green to white. This is another part or part of the trendy cloud that's part of the code is that with some crossovers, you're going to see some momentum change, and you see that by the change of the color in the candle. Notice that the dollar stalled right here. There is another demand zone right in this area. Okay. So right now the dollar is in a smaller demand zone and can find bids in here. And you can see if I were to come in here and use this demand zone, just go right, make sure I got the wick in there. Looks like about right here. And this is what I love about TradingView, by the way, is that you can create these templates. So when I go to settings and I go to template, I've already created all these. So all I have to do is like say, hey, demand right there, and boom. So you can see that we are in a demand zone here, and it is possible that the dollar could bounce all the way up towards 105.35. But overall, it does really seem like even after a bounce, it will come back down and settle down here by either the end of this week or into the next couple weeks. Maybe a couple days, we'll see. But this is the major demand zone, and this is the major supply zone that we've been using for a very long time. Okay. All right, moving on. Let's go into the TNX or the 10-year Treasury. Nothing's really changed here. Like I said, my gut is telling me that we could get down into the threes into July timeframe. We have a demand zone down here. So around 3.8, 3.7, somewhere in there. It hit supply, it pulled back, and it bounced a little bit here from a level that I found last week. But it's still underneath resistance. And again, I think just like the dollar, it might spike up, but I think it ends up coming back down into this level. Okay. So what is the takeaway from that? Which what I want to see in the treasury and the dollar is I want to see the market just kind of I would like to see those kind of settle down and just be choppy, if you will. All right. And stay away from the volatile moves. And I want to see prices stable between the supply and demand. Anything outside of the supply and demand is a whole different story, and we'll talk about that when we get there. Let's go ahead and move down. The next chart that we're going to be looking at is the skew. This is a very important part of my broad market analysis. And again, you know, this is just an indicator developed by the Chicago Board Options Exchange that measures perceived risk in the S&P 500. Just remember, while the skew is a useful tool for gauging market sentiment, and I use it every week, it's just one of many indicators and should not be used in isolation for making any trade decisions, but rather in conjunction with other market analysis. That's what I'm doing here. So I have other market analysis. This is just a piece of that. Okay. One thing that I notice is that this is pretty extreme. So when the skew is this high, basically what you're seeing is a lot of optimism, a lot of bullishness. Things are really like basically greedy. And when they get this high, historically, it's time to get short. And that's why we keep the same notes on here. Extreme buy puts 30 to 90 days out. It's not about if, it's when. And then the idea is to cash out on some of your puts, right? So now where are we? Well, I explained this several times over the last couple of years, but we live in a box of what I would call fear, and that's the new normal. So we changed this up about a year and a half ago, and we just trade off the levels based inside of this box until things change. Like, for example, if for some reason we actually close 2 weeks underneath this, that is a new fear that we haven't seen in almost 2 years, folks. The last time we were here was back in 2022. Melissa and I watched the S&P or the ES futures go up 200 points in one day. It was absolutely amazing. But what you got to understand is when or if the skew gets this low, this is what I would say just extreme fear. Like if you're fearful right now, you have no idea what this feels like if you have not traded in these market conditions. These are the kind of market conditions where you run outside and you start telling your friends and family to, I don't know, I think the world's actually coming to an end. Like you feel it. And I know very well when I feel that way, it's about time for the market to turn. And again, it's not about if, it's when. So we talk about 30 to 90 days out as kind of like a practice. But the new level, and we came very close to it on a Friday, this new level that has been working for a long time, since about May of 2023, is for me buying calls 5 to 10 days out. Now, we came very close to there. We came into demand. So I bought some SPY calls. And I put this, put my money where my mouth is. I mean, basically things did work out from here. Now, those contracts only went up about 115, 120 a piece, but I went ahead and held on just to see if this actually plays out. There is a possibility that I front ran this a little too early, and that fear still stays in the market, and that the skew continues to drop into the level. And this may afford me the opportunity to either add into my calls and try, this whole 5 to 10 days out and see if it works for me. And again, guys, it's just one trade of many trades that I will be taking. So again, um, right now, what the skew is saying is that it's at 139, and it looks better than it did way up here because this was super extreme. So we are in an area where we could see the market bounce to the upside. All right. Next thing that I want to be showing you guys is the fear and greed index. What I noticed right away is, deja vu. It's at 20. Well, guess what? Exactly 1 week ago when I did this, it was at 22. So 20 as well. So nothing's changed. People are still fearful. The majority of traders are either sitting on their hands or they're in puts. And as I would always say, 3 weeks down, we're still at extreme fear. If I were in charge of the market, I would bounce this thing and I would put these puts, I would take the premium. I would also maybe inject a little bit of optimism into the market. And then, right as you're getting a little bit more comfortable, go ahead and pull that rug and pull you back down into the extreme fear. Now, that's just a whirlwind. We'll see what actually happens. Again, price is king. Let's go ahead and move on into the futures. This is where we're going to use Thinkorswim again. I'm going to simply come over here. A couple notes, the ES and ESH25. I've been using ESH25 since the contract rollover. And I was peeking at the ES, and the zones are a bit different on each one of them. So the first thing I'm going to tell you is that the weekly, and for our members, just go into the room where I paste all these charts for you, and I want you to look at the differences, okay? But for right now, let's just look at the ESH25. So over here, we have a drop-based rally inside an up formation. Over here, we have rally-based drops plus inside and down formations. I combine both of these to create the supply zone. I just simply place our lines here on this formation and we have demand. Because it's so wide, I went ahead and used our quadrants. You can see that the ES futures after 3 weeks came into this ESH25 inside and up formation and went bid at 25% of that. So that's a good sign, just like the SPY, looking pretty good. Let's go ahead and move on over here. This is going to be your daily. We did get a buy off the trigger long from last week, but what I'm doing here, this is a 2D. We need to go back to just a regular daily. Okay. All right, there we go. And this is what we have. So down here is a really pretty zone, and I've left these words in here for the last several weeks, maybe a couple months. This is my favorite place to get long this year. So to me, talking about that extreme fear, that skew, that might be down here. And if for some reason we were to flush there really fast, this is my favorite place to try and get long this year. That means I'd put a little bit more size in and see if we can get going. But just know that it's not going to be like, 50% of my account or something. So I'm not going to do anything to blow up when I'm trying to take chances at these zones. Because listen, at the end of the day, we could be moving all the way back down to the lower yearly edge, which is around 5,100. There's also a place over here. You guys can see we have a nice strong move up. So price could go bid here. So this could get flush very easy. Okay. Now, what about on the way up? You'll notice that I identified some zones for you guys. These would be supply. Your resistance on this is going to come in at 58.19 this week by 59.12, basically a supply zone. And to the downside, I already showed you demand. This is just your trigger that was there last week. So know that we are building a hammer candle here, but if for some reason we were to gap up, the scenario, if we were to gap up, pretty big off of some sort of catalyst, just be careful right into this area. Okay. And as long as we hold this future weekly edge, which this will be this week's weekly edge, then, I want to be looking at staying long above that level as well. So this is a lot of support in here. Notice it says trigger long, trigger short, and so forth. Just understand that we don't necessarily just trade this blindly. We have a very strategic process that we use in order to get into these levels. Okay. Next, I want to be coming over into the 4 hour. Same thing, folks. Down here, we have a 4 hour zone that was tested. And I should put some notes on here just so you guys can see. I'm going to zoom in right there. All right, and let's look at the date. So right here is the formation that I'm coming up with. And this date is from 9/8/24. Just note that it has been tested. We talked about that in the class. So let's go over here and let's make a note while we're on here. And I'm going to start doing this so that if anyone doesn't understand where these levels came from, it could really help you out. So again, let's say this is a inside and up from 9/8/2024. Okay, I'm going to bring this over here just like that. So the zone is all the way down here. It doesn't mean we're going to go to it because again, it's already been tested. And far as a gap up or anything like that, we'd be careful around this 58.36 by 58.83. If we go back, 58.19, and this is 58.36. So again, this is based off a daily. This is based off a 4 hour. So if I were long and like say on my SPY calls and we were to get to 58.19 first, this could be a level where I want to trim. All right. If I have multiple contracts, 58.36 could be the second place I want to trim and so forth. Just know where they are on the charts. They are using different formations. So you can see here we have this huge rally and then we have a base or an inside and a huge down. So again, identifying that, and then I have this really beautiful rally base drop here. So I'm combining two zones, and that's why this zone's a little bit thicker, if you will, than just one zone. Okay, those are our zones for the 4 hour. Let's go ahead now, and before I move on, once again, please hit the like button. I really appreciate your time to watch these and give me feedback. And also understand that in the room, if you're new, welcome. These are the charts, but every single day we go one step forward. So in the morning, I'll have what's called the intraday chart, and we will trade off of that intraday chart. Okay, so a lot of this is still incorporated, but we'll have more lines on the chart, a little bit like quicker and faster areas to take profits and so forth. Okay. All right. So now let's go over to, well, let me show you real quick. I'm going to actually show you what the ES looks like versus the ES H25. And we'll just look at the weekly so I could show you the difference. So remember on the weekly on the ES H25, we had already come into the zone. Okay. I'm sorry about that. I was like, what is this? All right, right here. Now look on the ES. Same candle formation, but because of the big gap up on rollovers and so forth, things change, right? So right here, we have not come into the demand zone. Now in the room, I'm letting you guys know, I went ahead and showed you both weeklies. Let's just take note and see what happens and see which one actually works, okay? So if you want this one and we keep heading down, then this is what you probably want to refer to as far as the zone is concerned, okay? Anyways, let's now go into the NQH25, same thing. Here, the zone is a little bit different on just the NASDAQ, but we're going to stick over here to NQH25. Couple things to note here. We came in on the NQH25 on the trendy mid. We came into the zone. We basically held 25% of that zone. We have this beautiful rally inside and down formation, rally base drop. This is your supply. This is a great range. Personally, I think we've moved far enough. And we could move a little bit further in here, but I think what we've done now is that the news and all the political talk and all that crap has actually created a nice range for us to trade in as traders. So, basically, that's a lot of points from here to here. And we could definitely move from demand to supply again and then come in and kind of chop again for next quarter. Okay. So these are our major zones. That's all I really want to talk about on the weekly. You can see that, as far as this chart is concerned, we have went from green to white, which is kind of a neutral play, if you will. Let's go into the daily. Same thing here. We have some zones. I've identified those zones right there. That looks good. Again, that's a daily drop base rally or inside and out formation. We have some buy triggers around it. It's probably a little bit wider than it needs to be. If you wanted to tighten up this zone, what we would do is let's just move this down for a second. Move this line. We're going to come under about right here. And then you could take this and just come a little bit under there. And so if you want a tighten zone, it's going to look like this. Okay. So a lot less risk. And again, we taught this in the latest class, and the reason why we would do that is because of these banners here. Okay. Again, not to get confused with we just blindly trade these. Again, we use other things to get into these type trades. But some confluence here, resistance coming in at around this area, and then a short trigger here, and then we have a supply zone in here that is also confluent with our future monthly edge and this week's weekly edge. So a lot of confluence up here, kind of like the QQQ chart. We could see a really nice bounce, this week. And that is what I would call optimism. Price is king once again. Now let's go into the 4 hour. Same thing here, giving you guys your formations. Go ahead and take a look at that. You'll see it on or in the room as well. And you can see the 4 hour that I found from here is from 9/16/2024. These are your new supply zones to the upside. One thing I will point out is right in here, you may not see the formations that we've taught, but I guarantee if you take this 4 hour and start to drill down into a 3, then a 2, and a 1, and a 30 minute, you're going to find something in there. We could tell by the continuation candles down that there was a lot of fear. So most likely we have some sort of formation in there. So if you want to find a new one in here, go ahead and do so. All right. And the reason why we do that is if we break above here, the room from here to here is just very, very far away, and realistically you're going to find yourself at a lot of resistance points between those two levels. Okay, so again, drill it down, find some new zones there. Okay, all right, so the next thing that I want to go over is going to be Bitcoin. So let's get into Bitcoin just really quickly. I do have crypto as well. What I'm looking at on Bitcoin is going to be the monthly chart. That's my focus for right now. And the focus is, you could see here that we came into the 9 EMA on a monthly, which looks great. We have this area in here, and I'm showing you demand, less risk, if you will. I gave you two different charts to look at. If we come over here and do 2025, this is what my eyes are on. If price drops, I want to add more in the green zone. Okay, and the green zone is really wide. So again, going back, I'm giving you. Give me 1 second here. Less risk, sorry. This is going to be the other zone. So if things start starting to look really, really ugly, this would be something that, you know, instead of getting into the big green zone, you want to like wait a little bit longer. This would be that next zone. Okay. So, but 2025 outlook, it's still projected for me for up to here. Everything actually looks really good, just like ES, the Nasdaq, SPY, Qs. This is just a normal pullback after a really big move last year. We're just kind of digesting. What makes, listen to me, these are my final thoughts. What makes this year difficult is the noise. So if you're like anybody else, it's hard to be perfect and say, hey, I don't listen to news 100% of the time. I don't. I don't have a news channel, but I have to be realistic here. Like I'm on X a lot, and X is a source of news. So it's very difficult for me not to scroll and see a bunch of noise, and it can impact your psychological level of trading. And although you see the levels, you revert back to thinking about all the craziness that's going on, and it makes it very difficult to execute. As I said in the class yesterday, nothing has changed. Markets move from supply and demand. The only thing that's changed is that the political information, the tariff information, all that type of stuff is increasing the volatility, but in which it moves. So supply and demand, normal activity kind of looks like this. We're outside picking flowers, doing all the things we like. We're still moving to the zones. Okay. When volatility hits, what's happening is instead of that, it's doing this, that, 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 that. Okay. It's just moving faster. The zones are still there. The process is still there. So again, just stick to the process. I'm so happy that you guys took time out of your day to listen to me. Please, once again, don't forget to subscribe to this YouTube channel and give us a like. I really appreciate you. We'll see you in the room tomorrow morning. Have a great day.